Hey y'all, Ryan with TrendLizard.com here, coming to you with another one of our stock in the news videos. We're going to take a look at some of the stocks that have been making headlines over the past week or so. And essentially what we're doing is we're applying the Elliott Wave Theory to their price patterns to see if they are in a position to continue or to move higher or lower or whatever the case may be, to see if they're good trading opportunities for you. So that's what we're going to do. If you're not familiar with the Elliott Wave Theory, it's a very powerful stock market forecasting methodology that essentially learns to determine where something is in its price progression, as if this is just a chart of price action on Bitcoin, for an example. We're looking for moves like these, 5-wave advances, and then as they are corrected by counter trend ABC moves, we look for those moves to complete so they can give way to more 5-wave advances. That is basically Elliott Wave in a nutshell. And if you can determine where you are in one of these patterns, then you know where it's going. And that's always the goal with stock market forecasting. A lot of people, try to apply this on all time frames. I think it's most powerful and most potent on the longer time frames. It can get kind of confusing on the shorter time frames, but I think as long as you use it as a guide for any larger time frame, it's powerful. It's a bad idea to not have this in your trading arsenal alongside whatever other tools it is you're using. So we've been seeking to apply these to all the popular stocks, again, stocks in the news, just to show you exactly how powerful this stuff is and hopefully to give you some trading ideas as we go. So let us start with Bitcoin here. Crypto has been kind of in a nice little run up in 2023 after having a very rough pretty rough 2021, but a very rough 2022. So I want to take a look at Bitcoin to start to show you our thoughts on it based on the Elliott Wave pattern. Let's get going here. Basically, we have price action dating back to 2014, had some downside action, and then gave us one of those nice trendy 5-wave patterns to the upside. This pattern right here is confusing, but I think in the end, from what we've seen as price action has progressed, we can say this action off of the 2017 high into the 2020 low is one big counter trend move. I'm just calling it an ABC X ABC, which is just a double corrective pattern. When the low was recorded in 2020, it embarked on a very nice 5-wave upside pattern, as you can see here. No matter how we wanted to label it at different points as it progressed, it's very clear that it's over now, because what has happened since then is a large ABC pullback, as you can see. At least it looks like an ABC pullback so far. Now you see this yellow support area here, this yellow area. This basically represents a Fibonacci retracement. So basically a 38.2% down to a 61.8% retracement of this entire 5-wave advance. So what does that mean? It means that this is a larger degree move. If this pullback was just correcting this 5-wave advance here, we would have expected a low to happen sooner than it did. Instead, it continued to move lower. So we can confidently say this is a larger degree pullback, something like this. Basically, we don't see the full pattern here. I say it in most of my videos, but just because price action started here doesn't mean we're getting a complete 5-wave pattern. We kind of have to figure out where we are dropping into that pattern. And this one would make sense since this looks like a larger degree downside move. Say what we saw here was a second wave, third, fourth, and fifth wave to the upside. That would mean that this is the largest pullback we've basically seen on Bitcoin since its inception. And that makes sense because it is a pretty gigantic down move, essentially moving from about 70,000 down to 15,000 over the course of less than 2 years. So that is the deal there. This is a larger degree move, but as is so far, this looks like a counter trend move. And if it is, obviously that's a bullish thing. So let's go ahead and zoom in on the pullback. This looks at the pullback, and the reason why it looks like a counter trend move is because of the way it started. Now, we ended up getting a pretty sizable down move here off of that 2021 high, but the way it started had this downside action, and then we had that downside action retraced by a pretty clear 3-wave up move. So this doesn't really fit as part of the uptrend. It fits much better as part of the pullback. So the fact that we got a 3-wave move that retraced this downside action gives us what looks like a very counter trend start to the move. Obviously, things became much more intense to the downside from there, and it looks like a big 5-wave move. Wave 5 is super funky, but with the strength we're seeing now, we have to entertain the possibility that this 5-wave decline is over and that this entire ABC decline is over and that a more important low is in. Can't guarantee that's the case. Some cryptos still look bearish, but this is the big guy, and we're seeing some pretty interesting things based on the fact again, that this looks like an ABC down move, and also based on what we're seeing to the upside. So let's go ahead and zoom in on the upside recovery right now. This is the part that interests me the most. What we're seeing is kind of a funky start in November, but what could be happening here is a leading diagonal first wave, second wave pullback, third wave strong, third wave recovery, fourth wave pullback, and then just this week, or at least the last week or so, looks like a fifth wave to the upside. So what we're seeing looks like a trendy 5-wave move. Now, that's the goal, right? We want to find trendy 5-wave moves to determine the direction of the trend. So if we step back out and say, okay, if this is over, or at least if this portion of the pullback is over, then we're in a position for a much larger recovery. And with as far as this guy declined, there's a lot of space to move to the upside. So it's a little bit tricky moving forward. Essentially, when 5-wave moves complete, they are corrected. So if this is a 5-wave move that is getting near an end, it seems like we're getting closer to a larger pullback. So a move below 23,000 at any point indicates that that larger correction has begun. It's kind of hard to see this yellow area here. It runs from about 19,200 up to about 21,500. If a larger correction begins, we would expect price to head down to this yellow area, find support, and then give us something larger to the upside. But I think as is, essentially the bottom line is, as long as this guy is trading above about 19,200, this will have the potential to be the very beginning of a much larger up move. It could be the resumption of the overall uptrend. If nothing else, it could at least be a larger recovery effort, like a B wave on a larger time frame, that would still provide a pretty good buying opportunity. So I think Bitcoin has some potential here, and I think it's worth having a place again in your arsenal or in your portfolio as long as it's trading above 19,200. Be on the lookout for a larger near-term pullback with the move below 23,000 confirming that one is beginning. I want to look at one other crypto just because it's interesting right now. Take a look here at XLM. This is Stellar. And the only reason I mention this one in the same breath is because it looks like it's completed a large 5-wave decline, and now we're getting this bullish upside action in 2023. Looks like a 5-wave up move, and then a very clear counter trend pullback that has found support where it should, right in this yellow area, and starting to turn higher. So this looks interesting. As long as XLM is trading above 0.08, it's going to be in a position to give us a larger recovery that should be tradable. So there's that guy. So that's our little crypto bit. We're going to jump into some stocks fairly quickly, look at a handful of them, 4 different guys, starting with Draftkings. Here's Draftkings chart here. Man, it sure had a great run in 2020. It just skied higher, looked like a trendy 5-wave move. But as quickly as that trendy upside action came, it went, and in 2021 and then 2022, it gave it all back in what looks like a trendy 5-wave decline to the downside. And then once it recorded a low in 2022, it's been back and forth. Now, on any larger time frame, this is bearish. There's just no two ways to look at it, despite a huge 15% gain today. Really, that's just more back and forth within whatever's happened here. But we're getting trendy downside action and what looks like counter trend upside action. That's the formula for a larger pullback overall. So on any larger time frame, Draftkings does not look like a good opportunity, not a good proposition. On a shorter time frame, if we go ahead and zoom in, well, I guess we'll stay here. Basically, there is potential. If you look at the Fibonacci retracement area, I can't guarantee it's going to get up there, especially since this is more of a flat pattern. But even if it's to retrace like 38.2% of this big down leg, there is upside potential on the shorter term time frames. This is a common theme we're seeing all over the place. We're seeing larger declines that look like they're going to get much bigger before they're ultimately over. But currently, we're in these large counter trend recoveries that offer some nice bullish potential on the shorter time frame. So if we just look at this recovery, this is why we're calling it a counter trend move. It started with a clear 3-wave move. Recall that 3-wave moves are counter trend moves. And then after they gave us that move, we have a counter trend or a pullback that retraced most of that. So everything that's happened, it's just been a sideways muck, basically. Despite the counter trend nature of it, the potential to grow, like I I said continues to exist because that Fibonacci retracement area is so far away. If it is going to grow and realize that potential, Draftkings needs to stay above 1750. If it moves below that at any point, I would say it's time to go, because that would look like potentially the start of a much larger pullback, at least more back and forth action. And at that point, I don't think you'd want to be involved. So next up, let's take a look at Peloton, PTON. This is another one that's been in the news. It's had a very strong bounce in 23 so far. But you have to keep that in perspective, and this is that perspective. It had a really good run in 2020, like so many things did, but ever since then, man, it's been an absolute sell fest, and you can see the decline off of the 2021 high. Looks very much like a trendy 5-wave move. Now, that 5-wave move could be complete as we have it labeled, and this could be, again, the start of a larger counter-trend recovery. If you look at its Fibonacci retracement area, again, sorry, the yellow is kind of dull on this screen, but it runs from about 70 up to about 110. So huge potential if we were to get that type of retracement. There's no guarantee that we're going to get it. With as big of a sell-off as this was, there's no guarantee that we'll get an equally large retracement, but something to pay attention to. Let's go ahead and zoom in on the recovery effort here. So this looks at the recovery off of October's low, and it looks like a counter trend move once again. I mean, this up move here could be a leading diagonal, but then it was so deeply retraced by this pullback in December that we're just fooling ourselves if we try to call this anything other than an A, a B, and then probably a C wave to the upside. Again, the recovery can grow like so many things. It looks like the potential is very much there for a larger recovery to form, but the recovery does look like a counter trend move. So if you're trading it, you have to be on the shorter time frames. If you do anything on any larger time frame, it looks like you're going to have a bad time because the trend has turned down on a larger time frame. So we have to trust it. So Peloton can head higher in the near term, but if it moves below 1150 at any point, it's time to bail. I wouldn't have anything to do with it because you're trading against the trend, because this is counter trend upside action within a larger downtrend. Next up, let's take a look at Carvana, CVNA. Here's that chart, and it looks like a similar story. This guy has been all over the news because it's had such a nice pop in 2023. But of course, it's pretty small when you put it in perspective. I close my annotations here. When you put it in the proper perspective of what happened with this massive 5-wave decline to the downside. Nice recovery. Potential is very large, obviously, if it gets anywhere close to a Fibonacci retracement of this big down leg. But at the end of the day, the trend is down. So it can be traded on a shorter time frame, but it has to be kept in the proper perspective like the other guys. Let's take a look at it. This here is a logarithmic scale, so you can see how the boxes get smaller because everything is based on percentages. Let's change that to a linear scale, which basically every box is just 20 points all the way down. You can see how not big the recovery truly is within the scope of what's happened to the downside off of the 2021 high. Doesn't mean much. I'm just saying it kind of makes more sense why the retracement area is so far up here, because the beatdown has been very vast. Let's go ahead and zoom in on the recovery effort. And there's some potential here. You look at the 2023 recovery, you can see a general 5-wave formed to the upside. Prices pulled back. So far, that's a 3-wave down move that has found support so far in the yellow Fibonacci support area. If price can turn back up, move above 1615, you have something that's tradable. You have a trendy 5-wave up move and then a counter trend down move if it's able to get above 1615. Then you have a scenario where it's like, well, we have a Fibonacci retracement area much higher. This looks like a 5-wave down leg could be completed. This up leg is trendy. We have a counter trend pullback. All these things will come together and conspire to give us a larger recovery effort, or at least a very clear tradable setup. So I think if we can get back above 1615, Carvana is going to look like a pretty good opportunity. If instead it moves below the yellow area in any notable way, largely below 10, then all bets are off. This no longer looks like a clear trendy setup to the upside. So I've got one more for you, Moderna, MRNA. This guy had a fantastic run in 19, 20, and 21, most of 21, in trendy upside action, as you can see here. It looks like trendy upside action. Since then, things have changed. Very large pullback, and then is just largely sideways since then. Let's go ahead and take a look at this guy on a linear scale just to get it more in scope how big the pullback has been. I mean, we had this great run up, largely gave it back, and then you can see the sideways indecisive nature of what's happened in 2022. This isn't bullish action. I mean, this looks like counter trend price action setting up another down leg. So I don't know that it's a real good trading opportunity. Not sure why I have that chart here, but if we take a look at just this downside action and what's followed since there, this is what we have. And if we look at that downside action, looks quite a bit like a trendy 5-wave decline, and then everything sideways since then very much looks like counter trend price movement. Pretty hard to be bullish on this in any real way. We took a look at Carvana, and even though we expect a larger pullback overall, at least this stuff to the upside on the shorter time frames was trendy. And we're not getting that here. We're getting this counter trend price action. A move below 152 would just add even more to the counter trend look. I mean, sure, it's possible that this guy's going to give us a larger recovery and find its way up into the yellow area. The problem is when you're dealing with corrective moves, especially ones that are moving more sideways, they're unpredictable. And certainly it'd be lovely to buy a stock at 166 and have it go up to 260. It'd be a home run. That'd be great. But it doesn't matter if you can't predict it. It's just a guess. So there's no point in beating our heads over that. All we want to do is find predictable things. If you look at this downside action in 2021, you have a 5-wave decline and you have a counter trend recovery. That sets up additional weakness, and that's what came. So you're looking for things that are predictable, and the Elliott Wave Theory can provide that. So that's all we're looking to do. Find where we're at in the trendy, or in wherever it is in the Elliott Wave pattern, to determine if it should continue in that direction or not. So hopefully this stuff is helpful. I hope you come visit us at TrendLizard.com. We do this stuff on the 80th biggest instruments out there. We look at ETFs, crypto, individual stocks. We do it all. Come visit us. Free 7-day trial. Have a wonderful weekend, and we'll talk to you again later. Have a good one. Bye.